CFO of Volex. Been with the company for 5 years. I was brought in at the behest of two of the largest shareholders of the business, initially to do a financial restructuring and then to run the business and get the business back on track. So I'll tell you a little bit about the history, what we inherited when we came into the company, and what we've done to make the company what it is today, which is a very different company than it was 5 years ago. So if you can move on to the first slide, please. For those of you that are my age and older, so that's late 40s and older, you remember a time when you used to go and buy a kettle and it would have 2 wires or 3 wires on the end of it, and you'd have to go to Woolworths and buy a plug. Volex used to be one of 2 brands of plugs you could buy in Woolworths. It was either Volex or MK. And so Volex was, back in the 70s and 80s, the largest private sector employee in Manchester. And what they did was they had a number of old textile mills where they were extruding copper, making cables, and doing all sorts of plugs that were, exported to all the former kind of Commonwealth and Empire countries. And they were also making all the wiring harnesses for those wonderful British Leyland cars. So they had ladies knitting together harnesses of wire that were doing the 12-volt electrical distribution on cars. So if you've got a Maxi or an Allegro, you probably haven't because they've rusted, they've long since rusted away. But all of those cars had Volex harnesses, and I think I've got a 2001 DB7 Aston Martin that still has a Volex wiring harness on it. So that's the legacy business. We still do mains voltage power cords into consumer electronics. All of this stuff is made in China, Vietnam, and Indonesia. This side of the business, what it is that generally the product price point is about $1. So you're making a power cord for an electric drill or a toaster or a kettle. It's about $1 in terms of the cost of the product. And what we've tried to do is reposition the business away from what I call one-eyed Chinaman business. So in this sector, you've got Chinese low-cost competitors that make power cords for rice cookers. And when you go to B&Q, you can buy a Bosch drill or you can buy a Hongwan drill. The Bosch drill will be £60, the Hongwan drill will be £15. The Bosch one will last 10 years, the Hongwan one will last 3 goes. But if they're only putting a picture frame up twice a year, you can buy a low-cost drill. We obviously have found that the consumer electronics customers of ours have basically gone for commodity competition over the years. So Volex as a brand for this sort of stuff hasn't been able to compete. So what we've done is we've moved this side of the business onto higher end products. So if you look at who our customers are Apple, Dyson, Nespresso. So we're selling to people that want better quality, they've got a brand they want to protect, but it's still a business whereby the product pricing is low and it's essentially a commodity. You have to be the lowest cost player, and we're still making today 125 million of these power cords a year. So that's what old Volex was, and that's what I inherited when I came into this business 5 years ago, which was a business that was very much doing commodity power cords. So 3-foot long power cords for a Samsung television or for a Lenovo laptop. And what we realized was that was a very, very hard business to make money in. Gross margins were sub 20%. You'll see when I show you some numbers in a minute, the business was consistently making only 1 to 2% operating margins a year. And we realized we needed to get out of that business and get into something else, which is what we've done. The next slide on. So when we came into Volex 5 years ago, it had the power cord business and it also had a medical harness business. So it was making harnesses a bit like this that go into principally X-ray, CT and MRI machines. So if you go to hospital and you have a body scan, inside that machine there's all sorts of cables and connectors and coils that makes an electromagnetic field that interferes with the magnetic field from the magnet and creates the image. And so we had a business that was making those complex harnesses for Philips principally, Philips Medical. And it was actually quite a good business because that business, everything is FDA regulated because you're firing radiation at people. What happens is you get designed into the product has a life of about 20 years. All of the supply chain is kind of audited and approved. So I can't change a coil or a connector on my harnesses without getting FDA approval and re-auditing the supply chain. So what that means is it's a very, very sticky business and quite a decent margin. And we realized that was a business, the medical business was a good business to be in. And what we needed to do was go out and find other customers like Philips. And so we managed to find customers such as Varian, Electa, Intuitive Surgical, who are all these companies that make machines that are either used to detect tumours or to treat cancer. So, for example, we do this product here is a power supply for a laser that shoots cancerous tumours. And we make that box here, this unit is about $15,000. We make those exclusively in Eastern Europe for Thermo Fisher. We do other stuff as well as medical. We like the medical because it's very defensible, very regulated, nice margin. But we do other stuff as well. This harness actually is for Johnson Controls. What that is if many of you work in like a big office building and you walk up to the wall and you can change the temperature on the wall with a little thermostat. What's happening on the roof of the building is that somewhere a valve is opening and it's shooting cold air into your room when you press that thermostat. That is the control harness that's sitting in the box, the compressor up on the roof. So we do, Johnson Controls is a big customer. Carrier, if you've ever seen refrigerated trucks with the refrigeration units on, we do harnesses for Carrier. We do a lot of stuff in telematics. So a lot of distribution harnesses that go on to monitor how long truck drivers have been working, how far they've driven, all that sort of stuff. So it's a combination of medical and industrial. And so what we're trying to do is move the business away from that commodity side onto something that has a bit more value add. If you just move on to the next slide. So we are, in our area of operation, believe it or not, it's very fragmented, but we are the largest supplier of power products and complex assemblies in the world. We've got two businesses. This business now is larger than the power products business. When we came into the business, we had a lot of debt on the business. The business was low margin. It was distressed. It had breached covenants in December 2013. We refinanced the business. We now have a business that generates cash and is net cash. And the key, what we needed to do, and I'll show you in a minute, but we had to diversify the business because when I came in, the biggest customer by a mile was Apple. And it was like selling fruit and veg to Tesco's. It was almost like a wasp trap. You got into it and it was so big that every time they asked for a price down, we had to give them a price down. Every time they asked us to invest in a new program, we had to invest because it took up, 40% of our resources. And it was so large. We were doing all of the power adapters for iPad when iPad first launched, and it generated a huge amount of revenue, but unfortunately it was all price drop. So as it turned out, it was never good business, and we've gradually been reducing that business now. Just back quickly. So where are we focused on growth? Medical, I'll talk about. It's a really nice place to be. We've got a great medical business. Something I haven't mentioned is high-speed data centers. So we've got lucky in Volex. We developed some technology which is used for connecting switches in data centers to storage and to processing power, basically. So it sits in a data center. You have a rack that's 3 meters high, and in the rack it's full of storage devices where when you download your photos on your phone, they're sitting on a data center in Apple's data center on a storage device. And then there's a switch that fires that out into the internet back to your mobile phone. We make copper cables that go from the switch in the ceiling where the fiber optic comes in, and then it just drops down into the racks. And the reason they like to use copper is because one, it doesn't use very much power, and two, you can bend the copper through 90 degrees to get it into the back of the racks. If you use fiber, it snaps. So the fiber stops in the ceiling and the copper drops the last 3 meters. We make these cables that can be run at the moment now, we can do up to 400 gigabits a second. So that's like, I don't know, if you've got BT, fast BT Infinity at home, it's like, 10,000 times as fast as that. So that's the speed we can shoot signals down a copper cable. The limiting factor is the physics only work up to about 4 meters long. So we can't make it work any further than 4 meters. But we are basically the own label partner to a company called Mellanox, who are the leader in this technology. So Mellanox make the cards, they make the switches that go in the data centers, and we do all of the cables for Mellanox. So just to sort of finish off on where we came from. So 5 years ago, I came into Volex. We had a business that was really struggling. way too concentrated on the commodity side of the business. The team had gone after easy revenue growth and low margin. They'd over-invested in the wrong place. So when we came in, we had literally a management team. People were leaving, people were being fired. The revenue dropped 30% in 2 years, and we had debt at more than 10 times operating profit. And we've turned it around now where we've got a team. It's in a set, we've got a very diversified business. It's spread across the world. So we have a team that travels extensively. I spend 200 nights a year outside the UK, traveling around with customers or in factories. And it's quite a hard business to manage from that point of view, but we've had to bring in a team and a good local team in every single factory that we have. And things are going well. So we've grown the revenue 17% over the last 2 years. We've got no debt on the business, and the intention is to be around for a while longer. Volex has just had its centenary. So it's been a listed company in London for 100 years. And the plan is to try and make sure it stays here for a while longer. So, again, this is sort of, when I came in, what the problem was. The problem was we had 1, 2, 3 customers that were all shrinking and were half the business. And so we had factories that were fully dependent on a single customer. So I had a Shenzhen factory, a factory for Apple in Shenzhen, and I said to Apple, I don't want to do the business anymore because I can't make any money out of it. And I wanted to give them the factory, and they wouldn't take the factory off me because they said, no, we don't manufacture products. And I said, well, I don't want to manufacture products either. And essentially everybody in that factory does work for you. So you either have to pay for it, or you have to take the business somewhere else, please, and allow me to rationalize it over time. So that's what we were able to do. This is Apple. This is my Apple business today. My Apple business today makes more money than it did when it was this size. It used to be $120 million of revenue, and it was losing money. Every single product we produced for Apple, we were losing money on. This is medical, Philips Medical, so now my biggest customer. And then we have a nice spread of customers. So we've changed the business. What I call the tail, my tail revenue here now is much bigger than it was back in 2014. And we've done it by acquiring businesses and then also by organic growth. My other big customers are names that you'll know. Dyson, I've mentioned. Dyson's growing very, very strongly. But Dyson's an interesting one because if you think about Dyson, what they've done is we used to sell them very long power cords for vacuum cleaners. They've all gone now. I think we've got one model left that we sell. Everything's gone to wand-based battery-powered cleaners. So we had to move the business away from a power cord to an internal harness. So we make very, very high volume internal harnesses that connect the battery to the transformer, to the light, to the switch, to the motor. And we do that in Indonesia for Dyson. So going forward, the other legacy customer that we had that was an issue for us was Ericsson. So part of Volex's business was bought from Ericsson, and Ericsson basically lost the battle against Huawei in mobile networks, and we found it very, very hard to make money out of Ericsson. So we basically exited the Ericsson account and then replaced it with data center business. So this is the company that we've created today. Again, when we came into Volex, it was all here. It was all in China, and we've been helped by the fact, actually, I hate to say it because he's a controversial character, but we've been helped by Donald Trump because we've been helped by tariffs. So what happened, starting really 2 years ago, was we had customers saying to us, look, we need you to move production out of China. And where Volex was lucky was that we had factories in other places outside of China. So again, if you look at my consumer power cord business, the business I described at the start, where I'm selling a power cord to Panasonic or Lenovo, if that stuff's going into the North American market, it's suddenly attracted a 20% plus tariff on it. So the customers have asked us to move. So we've been spending the last 18 months moving a lot of production out to other locations. And we realized as well, I think, because our customers were saying it, a lot of the medical customers were saying, look, we don't want to make stuff in China anymore because they're stealing our IP. We'll make some non-critical stuff there, but we want to actually bring it back. And so, we've had, the reason we did this acquisition, for example, Silcotech Europe, was because Philips wanted us to buy that company. So what we've found is that the customers wanted us to get a bit closer. We still do the commodity kind of high volume stuff in China, but anything that's got IP in it, anything that's got got a lot of engineering content and a lot of changes in it. A lot of our products have changes quite regularly in them because they do different versions of things, and they don't want to have kind of 8 weeks worth of inventory on the boat. So they like to make it closer to the end market. And then Mexico's been very good for us as well, because obviously you've got a low-cost region on the doorstep of the US. And what we found is our buyers now, they go, I don't want to fly here anymore and spend a week and be jet lagged as hell. You know, I want to fly to San Diego. I want you to drive me over the border. I want to go and do a factory audit. I want to come back and I want to have a steak with you, and then I want to go home. And so definitely with what Trump has done, he's moved the business back this way. And it all happened about the same sort of time that we realized we needed to start, you know, rebalancing our business back, which is what we did. So that's now a real strength for us, because it's very, very, we have a lot of customers that want this global support network, which has been very good for us. This is kind of what we look like today. We're on a March year end. This is our power, our legacy business. What's happening in that business is that I am exiting commodity power cords, and I am repositioning that business. And then on the other side of the business, the complex assembly side, 2/3 of it's medical, which is, you know, quite nice high margin business, and then the other third is data centers and industrial. These guys are a customer that we have built from scratch in the last 2 years, largely at the back of this relationship. Amazon are big enough that they can buy direct, and they design their own data centers, so they actually spec what they want. And they came to us and they basically wanted a version of a product that these guys made, but at half the price. And so we actually went to the customer and said, look, you're never going to be able to sell it to them. Allow us to do that for them, and then I will discount your products because I'm using the same factory to make them. And that's sort of how we've been able to do, I think, business and grow the business in the last few years, is we're much more entrepreneurial than we were, and much more kind of dynamic than we were. What have I got, 5 minutes? Okay. So, strategy and summary, where we are. This is us today in the current year. Complex assemblies is more than 50% of the business. Where I'm trying to move the business towards is to keep the 2 segments. I'm moving my complex assemblies businesses here into what we call IMS. It's a bit like TT Electronics. I don't know if you know TT Electronics. My COO, John Malloy, built TT's business in China. So he's leading that piece. Data center products, I lead this piece. Big customers there are Amazon, Oracle, Mellanox. Consumer power cords, we're harvesting and just doing what we can where we can make money. Think about Dyson products, they have 3 or 4 colors in them, so they're a bit more expensive. They use yellow, purple, gray. Nespresso have logos and chrome products because they're on your worktop in the kitchen, they need to look nice. You can charge a bit more money for them. And then EV power is a new business for us. This is the story in terms of what we've done in terms of the recovery. So recovered the business, this was the decline of the legacy business and then the replacement of the new business. Operating margin up from the lows of 1-2% this year. We should be pretty close to 8%. Next slide.
Where can that go to?
Sorry?
Where can that go to?
Given the mix, it should be north of 10. Yeah, it should be north of 10. This is just a quick 101 on the EV market. So this is electric vehicle sales today. PH is petrol hybrid, BEV is pure battery vehicles, right? The point to make is at the moment, the only real players in this market are BAC and BYD in China, and then Nissan and Tesla in the Western markets. There's a whole wall of stuff coming, but at the moment, the market is very, very small. Obviously, there's also a market for all the connectors on the distributed charging side. So when you drive into a car park and plug your car in to charge the car park, there's all that market as well. Why can we play in the market? Because we're known as the high quality guys. We can do waterproofing, temperature monitoring, organised design. 10% of our business. Next slide. Just another quick slide on markets, cable assemblies in North America. The theme here is that they're bringing it back. Buy America theme, bring it back to Mexico, get it out of China. So we're benefiting from that trend. And then if you go on to the next slide, what we've been historically, if you think about where Volex was historically, is we were doing that bit, that cable and that wire. That's the bit we were doing. Now we can do everything on here. So we now make printed circuit boards, we now do metal work, we now do test, we now do repair. So My colleague John, that's coming from TT, is helping to create this business, to create, basically more value add. Rather than just doing one part of the assembly, we can do the whole thing. Next slide. This just illustrates it again. Old Volex used to do harnesses. Now we do the circuit board. Now we integrate the whole thing together. This is actually a breast coil. So if you go for a breast scan in an X-ray machine, that is inside a plastic shield, and that creates the magnetic field that interferes with the electric field that interferes with the magnetic field. This is probably, I don't know, $8,000, believe it or not, for that piece of kit. And then we go all the way up to, I don't know if you've ever been to Sainsbury's and you take your bag of change with you, you throw it in a machine and you can then get a voucher off your shopping. So we make that whole machine for Coinstar. Big market in the US, growing in Europe. These things are around about $8,000 a piece. And then finally, data centers. You guys all have mobile phones. You're all, big users of cloud computing via your employers and also, home stuff. Some statistics: 25 companies operate 500 hyperscale data centers. Half of the global traffic, half of the servers in the world are through those hyperscale data centers. So we can sell a shitload of cables to these people: Amazon, Google, Facebook, Microsoft, Oracle, Alibaba. Microsoft's latest data center in Washington has 24,000 miles of network cable in there. It's a hell of a lot of these are DAC jumper cables that we sell. So there's a lot of wire in the data centers. The bit that we're in today, our biggest bit today, is this. So this is a rack in a data center, solid state disk drives, hard disk drives, flash arrays, server arrays. Somebody will make a card that goes into that storage device, and somebody will make a switch. It might be Cisco, it might be Oracle, it might be Mellanox. We sell these cables. They've got electronics in them. They're quite hard to make. They're actually 16 pairs of micro coaxial cables. So like your old TV cable, it's a coax cable, very, very, very thin, and they're very, very hard to terminate on the boards. So we make all that stuff. Big growth business. Next slide, quickly. So just to summarize, this year, sales above 100 million. This year, profit of 30 million. Operating margin up from 1% 5 years ago. We think we're very cheap. We trade at 5.8 times. Why? Why are we so cheap? I'll be very honest with you. We're quite an illiquid stock. So Nat Rothschild owns 24%. Ruffer, a guy called Trevor Wild at Ruffer, owns 19%. And then, there's, who else are in there? Herald, Downing, number of sort of mid-cap AIM/IHT investors. But the volumes of trading in our stock is pretty low. I think, there's a bit of history about Volex. There's a perception out there that it is a stock that's, I would say, serially underperformed since the tech crash in 2001. And then also, we've got concerns that you all know about around the UK equity markets at the moment, Brexit, what's going on. Currently, we're trading at 98p a share. I just lined us up against some of our competitors. So we've moved the margin up here to 7.4% versus the likes of TT. TT is our best comp. Leone is a good comp for us, but they are a shockingly run business. To be honest with you, absolutely terrible. We buy a lot of kit from them, and we make a lot of money by packaging or doing something to their wire. They invest too much money in what they do, and they don't know how to charge for it. So, the main story is that we believe the business is undervalued. It should re-rate. And the final slide is just the key points. So, we're no longer a commodity power cord supplier. Margins, to your point, power cords, there's no investment required in that business. We've got loads of molding machines. We know how to make the stuff, right? It's an 8% margin business. In here, I've got some things that I do in data centers at a 30% margin, right? But I've also got some legacy stuff in there as well that I'm managing out that's lower margin. Overall, it should be 10%. I think at the half year, we probably will get it to 11. We've got results coming out in a couple of weeks' time. And then we're just doing all the things that you do when you have a business like this that's been undermanaged. So centralizing procurement, making upgrades to our IT systems. As I said, we're ungeared, and we've done a few acquisitions. All the acquisitions we do are customer-led. So a customer will say, there's a business, we really like it, but there's an issue with it. Either runs it's retiring, or it's got 3 customers in there, and we'd like to give them more business. We can't give them any more because it's too risky for us to give them more business because they'd be too dependent on us. Will you take it into Volex and absorb it, and then we'll give you more business? So we're finding plenty of acquisitions to do, and it's generating a positive kind of response from customers and for us.